Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about Nutrien stock. I will discuss their business, their competitive advantages, the dividend history of the company, the risk associated with this stock, and finally I will provide you a detailed stock analysis using my personal discounted future earnings model, and will then provide you with a fair value of this stock depending on your investment goals. The company HQ is located at Saskatoon, Saskatchewan, and their shares are traded on TSX for almost 98 Canadian dollar at the time of recording this video. They pay a dividend with a starting yield of almost 2.8%, and the market cap of the company is around 48 billion Canadian dollar. The stock had a 52 weeks high of $147, and now it is trades close to its 52 weeks low at $98. So obviously the share price of Nutrien declined significantly in the last couple of months. In this video, we want to see if this is a good time to buy Nutrien stock, and whether or not this dip in the stock price represents some kind of value. Before starting the video, I want to emphasize that I'm not a financial advisor. This video is not a financial advice for you to buy, hold, or sell this stock. This is my personal opinion. You should always do your own research before making any financial decision. With that being said, let's start this video. As you may know, Nutrien is a global leader in terms of agricultural products and services, including crop nutrients, protection products, and digital agriculture solutions. The company operates across various segments, including retail, potash, nitrogen, and phosphate. The retail segment is of course related to retail stores and distribution centers, which provide crop inputs and services directly to growers. These segments also include digital agricultural solutions, which offers various solutions to optimize crop yields and reduce biological waste. The potash segment, which is the main part of their business, produces and sells potash, which is a key fertilizer ingredient in agriculture. Potash is basically potassium chloride, and it helps improve both the uptake of nitrogen from the soil and also the conversion of nitrogen in the plant to amino acids and ultimately proteins. So it's a vital part of producing good plants and vegetables. Nutrien is the world's largest producer of potash, with mining operations in Canada, United States, and I think even Trinidad and Tobago. The nitrogen segment produces and sells nitrogen fertilizers, which are also essential for plant growth, and the phosphate segment produces and sells phosphate-based fertilizers, which are used to enhance soil and plant growth. Overall, Nutrien is a diversified agricultural company with a global footprint, and I think they have a very significant and strong moat in their own sector. The fact that Nutrien is the largest potash producer in the world speaks for itself. While Nutrien has an amazing moat, has an amazing business, unfortunately their business is cyclical, which means their financial performance is closely tied to overall health of the global agricultural industry. The company's revenue and profitability can be affected by factors such as commodity prices, weather patterns, global demand for food, and even government policies related to agriculture. Nutrien's business segments, particularly potash, nitrogen, and phosphate, are affected by fluctuations in commodity prices. When prices of basically potash and nitrogen and phosphate are high, Nutrien's revenue and profitability can increase significantly, as farmers are willing to pay more for crop inputs to maximize yields. However, when prices are low, demand for Nutrien's products may decrease, leading to lower revenue and profitability for the company. Weather patterns also play a significant role in Nutrien's business. Severe weather events can affect crop yields and demand for Nutrien's products. Overall, Nutrien's business is cyclical and can be influenced by a variety of factors that can affect its financial performance. The cyclicality of their business can be clearly seen in this plot, which is the EPS, the earnings per share of Nutrien in the last 10 years. You can clearly see that they had a boom around 2012 and EPS was around $9 per share. Then the business went through a bust, and around 2017, EPS was almost zero. Then again, in 2018 and 2019, EPS went up, 2020 it went down, and in the last 2 years, it's exploded. If we look at the return on invested capital, it's the same story. It's all over the place. Some years it's very high, some years it's very low. This financial data highlights why the company always trades at such a cheap valuation in terms of its price to earnings and price to cash flow, despite its moat. A lot of analysts generally expect Nutrien's revenue growth to be driven by a combination of increased demand for crop inputs and higher commodity prices in the long term. However, in the short and medium term, their revenue is expected to be volatile. For example, Nutrien management team themselves recently issued a guidance and they expect their EPS to be declined by 20 to 40% in the next year. Nutrien has a history of paying out and increasing its dividend year over year in the recent years, but they also have the history of slashing their dividend in 2016 during challenging years. So like their business, their EPS, their cash flow, their dividend is also cyclical and can be reduced if they go over a lower demand cycle. However, right now they are in a good shape, in a good position with a relatively low payout ratio, which can give investors some peace of mind that dividend may not be reduced anytime soon. They also bought back shares of the company in the last year, almost 10% of the shares, to return value to shareholders during a good year with nice profitability that they had. So there are some positives and negatives here, right? So the management team wants to return value to shareholders, but the business is extremely cyclical. In terms of the valuation, the company historically always trades at a low price to earnings because of cyclicality. I think right now the company trades in line with its historical numbers, but it doesn't mean much when the earnings can be reduced significantly in any given year. So let's try to model the future earnings of the company using discounted future earnings model. This is definitely my favorite part of the video where I can show you my stock analysis based on the financial data that I discussed in the previous parts of the video. I use a discounted future earnings model which basically estimates the value of stocks based on the projections of their future earnings. So I make some assumptions about the growth of the company in the next 10 years and then discount the future earnings per share into the present value of the stock based on my expected rate of return. So I start with the past 4-quarter diluted earnings per share of the company. And based on 3 different scenarios, I predict the future earnings of the company in the next 10 years. Nutrien is one of the businesses that its model is extremely complicated due to unpredictability of their cash flow and earnings. Here I try my best to define scenarios that can simulate the actual bad years and good years with an average number over the long term. In the bear case, or the most negative case for the stock, the company earnings per share will decline by 15% in the short and medium term, and then it will start to grow slowly by 5% in the long term. Again, I try to be really conservative with Nutrien as they are a cyclical business. I consider a terminal multiple of price to earnings of 4 for this case, which is consistent with historical bear periods for this company. For normal case, I consider a little bit better growth and a terminal multiple of 5, which is historical average multiple for this company. For the bull case, or the best possible outcome, I consider the business earnings decline by only 5% in the short term, and then it starts to grow exponentially during a potential bull run of potash by 30% year over year in the long term. And I consider a terminal multiple of 6, which is a bull multiple for this company. As you can see, we have a wide range of intrinsic values for this stock based on these 3 scenarios. Now let's use some statistics here to see what is the fair value of the stock. I assign a 50% chance to a normal case, 25% chance to the bull case, 25% chance to the bear case. For growth stocks, I usually expect 15% return, and for dividend or stable stocks, I expect 10% return. If I expect 10% return from this stock, the fair value of the company is almost 64 Canadian dollar, which means compared to the current share price of almost $98, the shares are traded at a 34% premium, which means it's basically not a buy according to the model. It means if you expect to receive 10% return year over year in the next 10 years on your money, you probably cannot receive similar amounts of average return if you buy the stock at this price. For me personally, I actually look forward to have a higher return than 10% from a cyclical business. And to increase my margin of safety, I expect 12% return from such company. If I expect 12% return year over year, the fair value of Nutrien actually is around 53 Canadian dollar. And this is the price that I'm interested in buying Nutrien at. You may say I'm crazy to think this stock, which had a 52 weeks high of $147, will crash down to $53. But if you look at the last 3 years, the stock was trading close to $40 during pandemic, so it's absolutely possible. If the stock never drops to $50, then still I'm fine, I'm okay, and I will invest in other businesses that I like them better. In summary, Nutrien is a large diversified provider of agricultural inputs and services, such as fertilizers like potash and crop protection products. The thing that I do like about Nutriens includes their unique business model and their strong moat in agricultural sector. I do like the fact that they are trying to diversify their income streams by going into digital agricultural solutions. I do like their low dividend payout ratio and the fact that they are buying back shares to return value to shareholders. And this is the list of the things that I don't like about Nutrien. So this list includes the cyclicality of their business and the fact that their revenue and profits, their EPS and cash flow can be influenced by various factors, including weather, commodity prices, and regulatory changes. And I don't like the valuation of the stock at the moment. And I think it's overvalued for a 10% return year over year at this price. There you are, guys. I hope you enjoyed the video. And if you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching. And I hope to see you guys in the next video. Farewell.